ordinance has been issued wherein section 168 capital A is being inserted in the CGST Act. 168 is the section which gives the power to the government to issue instructions, and now for this force majeure cases, they had got the power to extend various dates, etc., for which the various notifications will come under this section. When we come to this press release, which was released on 24th of March, it was containing 7 paragraphs. The paragraph 1 is relevant for the dealers whose turnover is up to 5 crores. They have stated that the dealers who are being covered under this limit up to 5 crore, they can file their return for the month of March, April and May by last week of June. But when we read it with clause 5, yani para 5 of this press release, it clearly states that whatever due dates are there from 20th March till 29th of June, the date will be extended to 30th June. So in a way, the date is being extended to 30th June for the month of March, April and May, that is 3B. Though nothing has been stated about GSTR 1, but if you read it with para 5 of the press release, which clearly says and specifically includes filing of return, if the due date is between these two dates, that is 20th March to 29th June, so the date will automatically get extended to 30th June. So friends, for the month of May, the due date of which is 22nd of May for big dealers, and otherwise now it is a staggered manner, maybe 22nd and 24th, you'll get a benefit up to 30th June only. The advantage which is being given to these kind of dealers, that is having aggregate turnover up to 5 crore, they are not liable to pay any interest, penalty or late fee. Though the relief for the month of May will be only for 10 days because the due date may be 20th, 22nd, 24th, but it will get extended to 30th June only. But then you are not liable to pay any tax, interest or penalty. Now the para 2 deals with the dealers who are not being covered in para 1. That means those who are having a turnover exceeding 5 crore. In their case also, the benefit has been given that they can file their return for the month of April, May and June by 30th June. Though in this paragraph they have mentioned the last week of June, but read with para 5, it becomes clear it has to be 30th June only. But in these big dealer cases, the relief is not with regard to interest, penalty and late fee. Here, the benefit has been given only with respect to late fee and penalty. Kindly listen to me very carefully. यहाँ interest पे relief नहीं दिया गया है, interest पे relief दिया है, but full waiver नहीं है. Interest पे किस तरह के 2 relief दिए गए हैं? Now I am coming to that point. If I file my return within 15 days from the due date of filing the return, then I am not liable to pay any interest. For example, for the month of April, it is, for the month of March is 20th April. If I file the return by 4th of May, then certainly no interest, no late fee, no penalty. But in case I delay my return beyond these 15 days, then certainly I am liable to pay interest, but not at the rate as prescribed under section 50 subsection 1, that is 18%, but a reduced rate of 9%. So the difference between the big dealer and the small dealer, big dealers who are having aggregate turnover of more than 5 crore and up to 5 crore to the small dealer, here the benefit of interest is given only for 15 days full waiver, and subsequent to that you are liable to pay interest at the rate of 9% as against existing rate of 18%. Here I would like to further state that for the month of May, where the return due is 20th of June, and I am supposed to file by 30th of June. So even for the purpose of interest, in my humble understanding, will be restricted only to these 10 days and not beyond that. Then comes para 3. Para 3 talk about composition dealer relief. It says that those dealers who were supposed to opt for composition within 30 days from the end of the financial year, now they can opt for composition scheme up to 30th June, and they can file the return for the quarter ending March. I'm again repeating, for the quarter ending March, January, February, March 2020 up to 30th June 2020. Then comes paragraph 4 of this press release, which grant extension to the filing of annual return. And we all know that is the statement in Form 9C, the due date of which for the financial year 18-19, again I am repeating 18-19, which was up to 30th June 2020, is now being extended to 30th June 2020. So 3-month extension has been given, and looking to the lockdown, I personally feel there may be a further extension in this. And as we chartered accountants were hoping, in this financial year, this 9C audit will come twice. Now I had got my own serious doubts about it. Of course, for 1920, the due date will be September, which may or may not materialize up to this financial year, looking to this framework. Then they have issued a notification wherein Rule 80, Sub-Rule 3 is being inserted, and they have given exemption to all those dealers who are having their aggregate turnover up to 5 crore, that they are not to file the reconciliation statement in Form 9C. Meaning thereby, in 17-18, you have filed the 9C for the dealers whose turnover was more than 2 crore. Now, up to 5 crore, there is an exemption. So the dealers who are having a turnover of 2 to 5 crore will not be required to submit their Form 9C. Though, as we all know, that Form 9, which is the annual statement, it has to be submitted by all the dealers having turnover more than 2 crores. Then comes clause 5, para 6, which simply says that we will issue the notifications giving the legal implication to this. Para 7 is very, very important. Para 7 deals with Sabka Vishwas Legacy Dispute Settlement Scheme. They say that the time period for making payment under this scheme is being extended to 30th June 2020. I am not able to understand. Para 5 also covers all compliance schemes, etc., wherein the due date is 20th March to 29th June. Now the question comes, in the case of Sabka Vishwas scheme, if Form 3 has been issued and my due date of filing the return, due date of making the payment was prior to 20th March, will I also get a time to pay that amount by 30th June? This is one issue which is bothering my mind, and according to me, there is no clarity. Let us see when the notification is being issued under this scheme, what is the language of that. But going by the spirit of the press release and the circulars, it appears those who are having the due date of payment after 20th March, they alone will get the benefit. But God knows, if the government want to make it more success and needs money, they may allow you to make the payment up to 30th June, even if your due date of filing the return was prior to 20th March 2020. Friends, कल मुझे जिंदल जी ने कहा था कि बैंक ऑडिट भी अलॉट हो रहे हैं, तो अगर जीएसटी के कंटेक्स्ट में हम बैंक ऑडिट की बात करें, तो मेरा ये कहना है कि बैंक ऑडिट करते हुए जीएसटी के पॉइंट ऑफ व्यू से 3 चीजें बड़ी इंपॉर्टेंट हैं. एक इनपुट टैक्स क्रेडिट, एक रिवर्स चार्ज मैकेनिज्म कंप्लायंसेस, एंड फाइनली द लायबिलिटी ऑन एडवांस पेमेंट्स एक्सेट्रा. I'll take one by one. First of all, I go to the provisions concerning input tax credit so far as banking and financial services are concerned. Because we are dealing with the banks only, so I will restrict my discussion with regard to banks only in this regard. Section 17, subsection 2 says in case you are providing a taxable and exempted services, you are entitled to the credit which is attributable to the taxable services. Meaning thereby, if my taxable services are rupees 100, taxable supply, sorry, and 100 is the exempted supply, and I am having a 10 rupees as credit, so I am eligible 5 rupees credit. And for that mechanism, they have already notified Rule 40, 41, 42, 43, which guide us how to distribute the credit. So far as the banks are concerned, there is a specific subsection 4 in section 17, which clearly says that banks are having an option either to follow the 17(2) or they can claim credit of 50% of the ITC available for a particular month, and rest of the 50% shall lapse, and they are not supposed to follow those apportionment method. So most of the banks are following that method. But in case you look at these methods, then Rule 38 laid down the procedure, read with this. 17(4) also says if you are getting a credit from a distinct person, this limit 50% shall not apply. इसको थोड़ा ध्यान से समझ लेंगे. For example, Punjab National Bank head office has raised certain amount and they have provided certain services to circle offices, and the certain amount has been distributed. So let us say head office has distributed 100 rupees credit to circle office A. Then circle office A shall be eligible for full 100 rupees credit, and there is no need to apply this 50% restriction on this amount. And thereafter, they say any credit which has been exclusively used for the purpose of non-business, that shall be disallowed. And we all know 17(5) talk about certain block credit. Even that amount has to be reduced. And whatever is the remaining amount, on that amount 50% shall be available. I'll try to explain it with the help of an example. Let us say there is one branch which you are auditing. In that particular branch, some circle office has provided a service for which the circle office cross charge, which we are knowing, has charged 5 rupees, and my other credit is 95, and my total credit is 100. So 5 is the amount for which I'll be eligible for the full credit, because it has been charged by a distinct person having the same PAN number, right? Now remains 95. Out of that 95, let us assume 15 rupees is for non-business purpose. Bank has done some charity, for that certain amount has been expended. So this 15 rupees shall not be available. Then remaining amount is 80. And then say 10 rupees is 17(5) credit, which is block credit, like works contract, motor vehicle, and others. So now that 10 is also not eligible for the credit. So meaning thereby, out of 100, 5 rupees is fully available. 95, 15 rupees credit is not available because of non-business. 10 rupees is 17(5) not available. Remaining amount is 70. 50% of that 70, that means 35 plus 5, which you have received from your circle office. 40 rupees is the eligible claim of credit to be claimed by the bank. I hope I have been able to explain it. And in case of any query, which we will take in the last 5-10 minutes, I'll try to answer that. Then comes a very important compliance, which has to be done by the bank. We all understand that generally
Hello.
Has been liable to service tax. More important is payment made to the buyers. Because whenever you sanction a loan, हाँ जी?
Sir, please repeat कीजिए, आपकी आवाज कट गई थी बीच में से.
Okay, I am repeating this. Now I am talking about reverse charge mechanism. First item in this regard is the payment made to the advocates. Am I audible now?
Yes, sir.
advocates. Now, we all understand whenever the bank sanctions a loan, they avail the services of advocate. For that purpose, every bank has maintained its own panel. Suppose I want to take a home loan, I can choose an advocate on the panel of a particular bank to whom I am approaching for the loan. There are possible two arrangements in this. One arrangement can be that the advocate bills it to the bank, and then bank claim that amount from the client who is ultimately the loanee. In this case, the question arises whether the bank is liable to pay GST under reverse charge. Now there are supply between bank and the advocate, because the advocate is raising an invoice in the name of the bank, and 293 of CGST Act defined who is the recipient of supply of goods or services or both. And according to this definition, the one who is liable to make payment to the supplier is the recipient of service. If that being so, then bank is liable to pay tax under reverse charge on the amount which has been paid to the advocate, and later on, when he will recover this amount without any margin from the loanee, then it can be reimbursement of expenses and no GST is applicable because it satisfies the conditions of pure agent. Bank is acting as a pure agent. But in case the bank charges any margin on this, is on add-up margin, then bank has to pay tax on that also. Now, the second arrangement is when the loanee is permitted to choose an advocate on the panel of the bank, but advocate raises an invoice to the loanee directly. So in that case, bank is only providing you a facility wherein you can choose an advocate from the panel of the bank, but as the invoice has been raised in the name of the loanee, then it is the loanee who is liable to pay the tax. But then you must remember that there is an exemption under entry number 45 of exemption notification number 12 upon 2017 of the CGST Act. As per that notification, if advocate is providing service to any person other than a business entity, then there is no GST. So in the case of house, taking this loan as in the course of furtherance of business, I'm taking this loan to acquire a residential house for myself, then I may get covered under this exemption. There have been a lot more litigation prior to GST era, wherein the bank are taking the same stand that ultimately the expense has been borne by the loanee, so we are not liable to pay tax under reverse charge. I don't want to go into that controversy, but at the same time, once the GST is being implemented, and we are going to audit 1920 where GST is applicable, where recipient of service has already been defined. So we need to look at the contract between the advocate and the bank, and particularly the manner of raising the invoice to ascertain who is the recipient of service. So in all those cases where bank is the recipient of service, certainly bank has to discharge the liability under reverse charge, and in order to minimize the cost of transaction, he can further claim this amount as a pure agent from the loanee, and on that transaction there will be no GST. But in case it's a commercial world, bank also want to add his administrative cost or some margin, then bank will be liable to pay tax on that amount also. Of course, whatever amount has first charged to the advocate for the same. Friends, after understanding this, the second important item is under reverse charge, that is transportation of goods by road. Now, unlike service tax, now there are two situations where bank is not liable to pay tax under reverse charge. One, as we all know, that from January 2018, transporters have been given an option to discharge their tax liability at 12% with full credit available to them. In that scenario, if the transporter is charging tax at the rate of 12%, then there's no liability under reverse charge mechanism on the banks. But yes, if he's charging a concessional rate of tax at 5%, then bank is liable to pay the tax if he is making payment to the goods transport agency. In case the bank is getting a GR, which is fully paid GR, and the supplier is charging the freight charges in his invoice, then there is no liability on the part of the bank because the payment has been made to the supplier and not to the goods transport agency. And this proposition is similar to what we had under service tax, and I'm sure my brothers, professional brothers, will be aware of that. In case of any query, you all know my number. I can just repeat it: 98-110-69299. If you have any issue with regard to this meeting, you can call me even after this meeting is over, and I shall be pleased to clarify that issue, which will be raised by the members according to the best of my ability. Then the third item under RCM, which is really important, is sponsorship. Of course, it is mainly for the main branch auditors, because wherever there is a sponsorship given by the bank, these kind of decisions are being taken at the regional level or the head office level, not at the branch level. So in branch level, that proposition may not be there. Another item which I want to draw to your attention is the services provided by the central government, state government, union territory, or local authority. You can say what kind of services can be there which are being used by the bank. Security services can be one of the services. I'm just giving an example. Renting can be another example where the bank has taken a premises which is being owned by any of these authorities. In security services, we have seen Border Security Force and other agencies also provide services to this commercial organization. So if you are receiving those kind of services, then that branch is liable to discharge the liability under reverse charge mechanism. So this also need to be taken care of, because I have seen number of branches wherein the security personnel are being provided by these kind of central forces. Then comes the services provided by the recovery agent. We all understand in the case of recovery agent, there is also a RCM mechanism available. So if any payment has been made to the recovery agent, then we need to look at it that it is being, the liability for the same has been discharged by the bank under reverse charge mechanism. Then comes services by DSA, that is direct selling agent, even that is under reverse charge mechanism, and that is also be liable to be paid by the bank. So far as reverse charge is concerned, these were the 5-6 items which were really important looking to the bank audit scenario, or looking to the banks are concerned. So one should take care. Another important thing is, as we all know, bank are provider of services. So once they are receiving any advance, then they are supposed to discharge the GST liability on such advances also, even if the services are to be provided in the times to come. Another important aspect which you can consider while doing the audit is, if the bank has paid certain advance to certain supplier of services or goods, then they cannot claim the credit of GST against such advances. You cannot say the bank has given an advance of ₹100 and this 100 is inclusive of GST. You can do the reverse calculation and claim the credit in the month in which advance is given. It is absolutely incorrect, illegal. Your attention is drawn to section 16, subsection 2, which says in order to claim the credit, you should have not only the proper tax paying document, that is invoice, which is missing, number one. Number two, you must have received such goods or supplies. In case you are not able to receive such goods and supplies, of course, once it is an advance that is not being received, so you are not eligible to claim the credit in the month in which the advance is paid. you will be entitled to claim the credit once the invoice is being issued after the receipt of supply of goods or services. So I think these are some important issues which need to be considered so long as bank is concerned. And sometimes I'm just repeating, everybody knows this proposition that if I'm receiving any services from a non-resident person not having an office in India, except online information database access or retrieval service, again, bank is liable to pay tax under reverse charge. Then friends, now I'm coming to the third topic, which is the last topic of this discussion, and then we'll move to question answers. That is, yesterday, a circular has been issued, 135/05/2020, dated 31st March 2020, relating to the refund issues. These are really important issues, and I don't remember the name of CA. One of the CA from Jalandhar itself has called me with regard to one issue, and now that has been clarified. So my point of view, which I have already shared with that CA, will get confirmed. First of all, 54 is the section which deals with the refund so far as CGST is concerned. Section 16 of IGST deal with the refund on zero rated supplies. So once these two sections are to be kept in mind while reading this circular. The 54(1) says you can claim the refund within 2 years from the relevant date. Now, once you are eligible to claim the refund, the department has already issued a circular 125, and there was earlier on another circular wherein they stated that you can claim the refund for a different tax period, but all such tax periods shall fall in one particular financial year. For example, for the quarter April to June and July to September for a particular financial year, I can add these two and claim the refund. But if one quarter belongs to next financial year, then I am not being permitted. This provision is being challenged. They said this circular is ultra vires. Government cannot put up a restriction or restrict the facility available to the taxpayer not provided under this statutory provision. As Section 54 and Section 16 of IGST Act does not put up any such kind of limit of Pitambara Books Private Limited, reported as 2020 VIL 45 Delhi. Delhi High Court struck down that proposition, and now accepting that proposition, and in this circular it has been very clearly stated that after analyzing the provision of Section 54 and 16, the department is of the view you can file an application for refund wherein two periods can stagger to two different financial years. Earlier on, this facility was not being made available even on the GSTN portal. Now, after this circular, I'm sure they must have talked to GSTN, and this facility shall be provided on the portal also. Second important issue with this regard is when I am buying a particular commodity, let us say I am buying a wristwatch, the rate of tax is 18%. I have purchased 100 wristwatch, but once I am selling it, the government, because of any reason, has reduced the rate of tax to 12%. So assuming I have purchased a watch of rupees 100 on which 18 rupees ITC has been paid. Now my output tax liability is only 12 because the rate of tax has been reduced. I am selling the watch in the period when the rate of tax is 12%. If that being so, can I claim the refund of rupees 6 under inverted duty structure? The department says no, because you're selling the same product Inverted duty structure means where the inputs are liable to be taxed at a higher rate and output is taxable at a lower rate, because you are doing trading of the goods and you are paying and you are not doing any value addition on that product. So this kind of refund shall not be available to you, and you will not have any benefit of inverted duty structure. Friends, here let me tell you, there are two kinds of refund which we need to understand, because the next issue raised in this circular belongs to that. One is refund of ITC, which is permissible only making a zero rated supply, that is exports, or when there is an inverted duty structure. And inverted duty structure will not apply to the trader even if there is a credit accumulation because of change in the rate of tax. But let me clarify that excess credit you can adjust against any other trading which you have done. That credit will not be lost. The only thing is you will not be eligible for the refund. But then the second kind of refunds are where we have made excess payment maybe due to wrong calculation, maybe I was liable to pay interest rate tax, I have paid interest rate and then I have made the payment of interest rate which was likely to be paid and I am claiming a refund of IGST. Maybe because of provisional assessment of tax, I have paid the excess amount and final assessment is less. Maybe there is a situation where I have deposited a pre-deposit amount of 20% and then my appeal is being heard on merit and I have won the appeal. That pre-deposit amount has become refund to me. Now, as I told you, the refund of ITC was available only in two situations, exports and inverted duty. But there was a lacuna in this. Once I am making payment of ₹100 as pre-deposit, and on that day, there may be a balance in my credit ledger, 60 rupees, and 40 rupees I have paid in cash. So in a way, I have paid 60 rupees through credit, 40 rupees in cash, and once I won the appeal, the government has to refund me 100 rupees, that will come under cash only. So meaning thereby that 60 rupees ITC which I have availed to discharge my liability of pre-deposit, I am getting it or converted into cash. So the government realized that this lacuna has been left in the law. So now they have issued a notification number 16 upon 2020 Central Tax dated 23rd of March 2020, wherein they have very clearly stated and they have inserted 86(4) capital A in Rule 86 and 1 capital A in Rule 92. The combined effect of these two sub-rules is that once a proper officer is sanctioning you the refund, he will look at it at the time of original payment, how much money was paid in cash and how much amount was paid in credit. So whatever amount has been paid through credit, that will be credited to your credit ledger, and whatever amount you have paid in cash, that will be refunded to you in cash. In this example of ₹100, you will get 60 rupees credit in your electronic credit ledger and 40 rupees will be received as refund in cash. Now, you may ask me, Mr. Batra, there is a possibility that I have paid 100 rupees deposit and I have lost the appeal to the tune of 50 rupees, which will be adjusted against my demand, and only 50 rupees is the demand refund which is due out of the pre-deposit of ₹100. It can happen. So they have also visualized that situation. They say if that being the situation, you have paid 60% amount in credit and 40% amount in cash. Now 50 rupees refund is due to you. So obviously you will get 40% of that in cash. That is 20 rupees will be given to you in cash and 30 rupees will be given to you by crediting to your credit ledger. Then friends, the next paragraph, which is again very, very important, is that sometimes I am claiming the refund with respect to the invoices which has not been reported in my 2A. So as per department, because system was not working efficiently, they said, if that being so, you can produce the copies of invoice and necessary formalities are to be completed. And by doing so, you can claim the refund with respect to the tax paid on the invoices which are not being reported in your 2 capital A. Now they say, no, this practice is being discontinued. Our portal is perfectly now. So in order to claim a refund with respect to the invoices which are not being reported in 2A, you shall not be eligible for any kind of credit. So meaning thereby, if 2A, if the invoice is not appearing in your 2A, you shall not be eligible to claim refund with regard to that invoice. Then another situation in that circular number 135, they have issued an extra also, which was earlier on being issued in original circular 125, which was issued on 18th November 2018. There was no column for HSN code and SCC. Now they have added that column where you are supposed to write HSN, SCC against the invoice for which you are claiming the refund. But one concession is being allowed where the supplier is not supposed to write HSN and SCC, and he has not mentioned HSN or SCC in the invoice issued by him. You are also not supposed to mention those HSN and SCC in his invoices. So this is what circular number 135, which has referred to earlier circular 125. So this circular is really important. It has various other issues also. Then friends, I'm coming to the ordinance which is being issued on 31st March. That means yesterday only. As I told you, section 168 capital A is being inserted to take the powers. And I'm sure in the passage of time, in the coming weeks, we'll see the notification giving effect to all those concessions which were given in the press release dated 24th of March. Once the government is giving the clarity, so of course these provisions are not likely to be challenged in the court, unlike the example we have discussed in the case of refund expanding 2 financial year. There also the High Court, Delhi High Court has stated, benevolent circulars are binding on the department, but you cannot curtail the facility or put any restriction which is not in the law. So these being the concessional benefits being allowed to the suppliers in the press release, certainly be given proper legal backing and not likely to be challenged. So these benefit and concession, you can deem that they have been permitted to you. With this, I would like to conclude my deliberation for today. But now I am open to any question which is being asked to me. I don't know whether that question will be read to me or it will be communicated to me.
I will be speaking. I will be speaking the questions.
Please.
Sir, queries are there. First query is, when there is a surrender of stock during survey, income tax survey, whether GST would be payable on that or on sale of that?
There are so many cases. Even I have argued one case of Deltex Enterprise, wherein we say that the liability under GST shall arise when the taxable event will happen. Taxable event is supply of goods and services. If for buying mental peace or for any other reason I have surrendered some money or some stock, or I conceded something, and the department is not able to prove that these supplies have actually taken place, then GST will not automatically be there. But yes, kindly mind it. Once you are making a surrender and you are being reported your statement, there is appraisal in case of such, etc., and you have admitted that the stock which is found less has been sold by me, and there is admission, then certainly it is a big issue. You are liable to pay GST on that. We have seen these kind of similar cases in service tax also, you remember there was a raid on all these IAS training institutions wherein they surrender certain money. And of course, when the department said that from where this money was being earned, they have no option to say this money is taken from the students who have been given the training. And then they were liable to pay service tax also at that point of time. And the liability was service tax was much, much more as compared to income tax. So you have to be very, very careful. Even if you surrender something, don't admit that the supplies have been made. Simply say to buy the mental piece, or I am not able to explain it the stock right now, or the stock has been given to the job worker or wherever for which I don't have any documentary evidence. So I am willing to pay income tax on this. If you admit that the supply has been made, then you are in real difficulty.
Right, sir. Thank you. Sir, next query is 3B of February has been extended date of 3B of February.
What are you saying?
3B of February
3B of February, yes. As I was reading that press release, kindly refer para 5. They say any due date which falls between 20th March to 29th of June get extended to 30th June. So for the month of February, because the due date is 20th March and subsequent to that, certainly it is being extended. There is no doubt about that.
Next is whether GST applicable on reimbursement of electricity expenses by bank to landlord.
Electricity expenses.
The reimbursement of electricity expenses by bank to landlord.
देखिए ये बड़ा एक सेटल्ड क्वेश्चन है क्योंकि इलेक्ट्रिसिटी हैड टू बी गुड्स in service tax also now because goods and services both are the subject matter of electricity. Once you receive an invoice from any distribution company, is there any GST on that? No, because electricity is not subject to GST, it's being exempted. So once there is no GST on electricity, if I am claiming it as reimbursement and showing it separately on the invoice which has been raised by me, there's no question of GST. The problem comes once I don't raise an invoice and I charge a consolidated amount. For example, I have given a premises which is being given on, let us say, 5,000 rupees per month, including electricity charges. So that 5,000 fully will be subject to GST. You must have seen in the malls, there are sub-meters being installed at the premises, shopkeepers. And then there are certain electricity which is being consumed in the common area, lifts and toilets. So when these are being consumed in the common area and I am charging you 12 rupees, then this electricity is an input for me. So meaning thereby, once I am charging 5 rupees per square feet, maybe carpet area of your shop as a mayor to collect the common charges, then the full amount of common charges shall be subject to tax, including the toiletries used in the washroom, electricity, etc., because they are my input. But so far as electricity is concerned, which is where there is a sub-meter in your shop, certainly not subject to tax because I am charging it, even if there is a margin on it. Even if it is not a distribution supply company, electricity and supply is a distribution company, even if it is being generated through my generator also, and my cost is, let us say, 8 rupees, I am charging you 20 rupees. Once an item is not subject to tax, then irrespective of the margin, it cannot be subject to tax. Electricity is not subject to tax, irrespective of the cost. So the only thing is that electricity should be one shopkeeper specific or tenant specific, and based on the sub-meter, even if there is a margin, no GST. But yes, on common services, if it is one of the input, and I am charging a consolidated amount as a common charge, then that amount shall be subject to tax.
So next is calculation regarding input tax credit for exempted and non-exempted goods in case of banking company.
देखिए, as I told you, banks have been given two options. One option is 17(2), wherein they say that once you are making a taxable supply, including zero-rated supply, which is being considered as taxable, even though no tax is payable on that, and exempted supplies, then the credit has to be available in proportion to what your taxable services bear to your total turnover. And for the purpose of input and input service, Rule 42 has been specified. And with regard to capital good, there is a Rule 43, which tell you the basis of calculation. But according to my information and knowledge, because this issue was subject to huge litigation in pre-GST era, and once this facility was given to the banks of 50%, which was available in the negative list also, most of the bank, according to my understanding, they have opted for 17.4, 50% credit. But in case they have not opted for, then you have to follow the same mechanism which you do in the case of any trader. Because number of services are exempted in the case of bank. For example, once I am collecting tax on behalf of the state government, I cannot charge anything. Once I am providing certain services to the government, I am not supposed. So in that proportion, we have to distribute the credit.
Total calculation would be there. Next is the GST on locker rent in banks. Sometimes it is advance and sometimes it is pending. When bank will discharge liability? Locker rent.
As I told you, when I was dealing with the issues relating to the bank audit, I said if you are receiving certain amount as an advance, then immediately in the month in which you receive the advance, you are supposed to discharge your liability. But in case bank is making payment of advance, they cannot claim the credit unless otherwise the services are being received. So if bank is charging me 3-year rental advance, suppose, in the month of April itself for the financial year 2021, 21, 22, 2023, then bank is liable to discharge the liability in the month of April itself.
Any extension of date of deposit TDS under GST?
TDS under GST section 51.
Yes.
So kindly appreciate clause 5 of the press release clearly says any compliance including filing of return, notice, refund, etc. where the due date falls from 20th March to 29th of June automatically get extended to 30th June.
Is it necessary for an unregistered trader to get registration under GST to pay RCM on GTA services?
अरे सर ये तो सर्विस टैक्स से भी चलता आ रहा है. You all know section 24 talk about compulsory registration. Even if your aggregate turnover is within the exemption limit and you're liable to pay tax under RCM, you need to compulsorily take registration. And there are two ways wherein we can avoid it. As I told you, either I receive the services from the GTA, who is charging tax at 12% with full credit, or alternatively, I am making payment to the supplier of goods and getting a paid GR.
Is there any change in RCM of recovery agent if recovery agent is a company?
I think recovery agent in the case of individual, I don't know. I don't have right now the entry before me. But I think this recovery agent RCM is only in the case when the recovery agent is an individual, according to the best of my knowledge. I don't have entry right now. Kindly see the entry carefully before you do that.
If I have done export of service under LUT, but I have not received export proceed within timeline, where do I need to pay IGST and whether any interest liability also?
Is it with the case of services or goods?
Services, sir. Services.
Services in case you have not received the payment in control foreign exchange within the specified time limit, or even received the payment beyond the time limit where some power has been given to the commissioner also. In that case, you are liable to pay IGST from the day when you raise the invoice, and interest is also levied. There is no remission with regard to the interest also. Interest will also be payable.
Is there any concession about 10% ITC rule applicable in next 3 months? 36.4, sir.
So 36.4 specifies whatever credit is available in your 2A, you can claim that credit plus 10% over and above that. In fact, if you look at the philosophical thought, when initially it was 20%, which was reduced to 20% at 10%. In case the government disallowed the amount of ITC on the figures which are not appearing in 2A, then some disallowance has to be there in every case. फॉर एग्जाम्पल मेरा 100 रुपए का क्रेडिट है, मेरी किताबों में 90 रुपए आ रहा है 2A में या 95 आ रहा है. If I disallow certain amount which is not appearing in 2A, then some disallowance has to be there. The government says no. In case 90% 2A, 90% credit is appearing in 2A, that means you are a genuine dealer. That percentage may be challenged or subject to litigation. Then you are entitled for the full credit. Initially, it was 80%, which I thought is a good move by the government, because ultimately it is the quarterly 2A which is not appearing, or maybe some errors or and all that, जिसके लिए उन्होंने 20% का relief दिया था. Now it is being reduced to 10%. So 91.1 rupee, if the credit is in 2A, then you can claim the full credit. But the point is, if you are claiming 10% over and above what is appearing in your 2A, can you maintain that detailed record? How will you ensure that this credit of 10% which you are claiming over and above 2A will be adjusted in the coming months? I have applied my mind to it. It is practically impossible, even for the biggest companies, to maintain that kind of a detailed record. So you have two options. One, either claim the credit available in 2A only, then there is no litigation at all. But once there is a huge cash flow problem, then forget about 10%, claim the full credit which is available as per your books of accounts. By doing so, you are violating the 36(4), and which is already being challenged in Gujarat High Court and Delhi High Court also. And because of this lockdown, or the dates are not happening, hearings are not being done. According to my understanding, it may struck down. So then you have to take that risk. If it is not being struck down, then you will be liable to pay interest. In any case, the credit will come not in the month of April, in the month of June, if it is a genuine transaction. So for 2 months, you may have to pay the interest. So either claim full credit, which is as per your books of account, or claim whatever is appearing in 2A. By claiming 10%, you are inviting a huge trouble of maintaining such a detailed record, which, according to my humble opinion, cannot be maintained.
GST under RCM applicable if payment to professional outside India for providing service in foreign country. सर सर्विस भी फॉरेन कंट्री में प्रोवाइड हुई है तो पेमेंट भी फॉरेन.
ऐसा नहीं हो सकता. देयर इज नो जनरल रूल कि अगर आपको पेमेंट कंट्रोल फॉरेन एक्सचेंज में आई और सर्विस वहां हो. इन द केस ऑफ एक्सपोर्ट ऑफ सर्विस, वी आर नॉट टॉकिंग विद जीरो रेट. द लायबिलिटी विल नॉट बी देयर if the supplier is in you are in India. Kindly allow me only 1 minute. Okay. You are in India, recipient is outside, it is there receiving payment in foreign exchange, but they are not the distinct entities of the same person. But the most important is place of supply should be outside India. For example, if you are an intermediary and your service is where the location of the supplier, like tour operator, it can never be an export, even if you receive the payment in control foreign exchange. And for the purpose of determining the place of supply, we have to go to section 30 of IGST. So place of supply and nature of service we have to see.
So next query is, what about GST liability if generator machinery provided by private contractor at various branches?
Can you repeat the query?
What about GST liability if generator machinery provided by private contractor at various branches?
Okay, if I am a builder or I am a person who is into the business of leasing the generator and I am having other establishment in other states also. So I think the query is, once the generator is moving from Jalandhar to Amritsar or Jalandhar to Fagwada, is there any liability? Kindly see, if the movement is within the state and you have sought only one registration, then there is no doubt this generator can be moved against delivery challan and there is no GST liability. The problem may come when the generator has been moving from Punjab to Haryana, where you had another branch, and that branch is also registered. If that being so, then now, because of section 25(4), these two distinct units are being treated as different person. So if it is a registered unit, certainly you are liable to pay GST on the leasing charges which are liable to be paid. You can take advantage of second provision to Rule 28. which says if the other unit is entitled for the full credit, then invoice value, whatever you say, that will be there. Now there can be another situation where you are having a generator supply work in Punjab. You got a contract in Haryana, and that is only one contract which you have to execute, and for which you are not registered in Haryana, and the party has given an order from Haryana to Punjab, and you have received that supply order in Punjab itself. Now you are shifting that generator to the premises of the client, where you don't have any establishment and you have not got yourself registered and you're not liable to register there. In that situation, the generator can move on delivery channel.
The next query is, a student apply for MBA course in a UGC approved university and pays to 10,000 as part payment. Later on, he does not join the course. Hello?
Anji, Anji.
Later on, he does not join the course. Is the forfeited amount is taxable under GST in the hand of university?
Okay, once I am receiving an amount against a supply which is exempted, there is no question of tax. Forfeiture is something different. Forfeiture is a deemed supply where you have received the money under the clause that agreeing not to do anything or agreeing to done something, anything. The actual language is, I'll just tell you, I'm just forgetting it. If you're getting an amount agreeing to do something, abstain from doing something or doing any act. So once this forfeiture is there, so that means you're forfeiting the money not for education purpose, but because he has not complied with the conditions. Either he has not been physically available or he has changed up his mind and all that. Certainly it will be subject to tax. Agreeing to the obligation to refrain from an act, to tolerate an act or to do an act. This is the language.
Yes. Common credit in case of hotel industry to reverse or not, as rate of GST on rent, restaurant and banquet is 5% and room and other services 18%.
Okay, kindly see wherever the concessional rate of tax is there, they are giving a conditions to fulfill. If the condition is it is not subject to ITC, for example, restaurant, so obviously any service exclusively used in that restaurant, no credit available. So far as common services are concerned, they have to be proportionately disallowance in terms of the revenue earned from the restaurant versus the revenue which is being earned from the tax which is subject to full rate of tax. Am I clear?
Yes, sir.
मैं ये कह रहा हूं कि जब भी कोई कंसेशनल रेट ऑफ टैक्स लगाया जाता है तो उसमें कंडीशंस होती है. अभी गवर्नमेंट ने एक 5% टैक्स लगाया है मेंटेनेंस रिपेयर ऑफ एयरक्राफ्ट में विद फुल आईटीसी, no restriction. So in restaurant case, which is the queryist case, in the case of restaurant, I can charge 5% subject to no claim of any ITC. So let us say in that hotel, my business is 5 lakh from restaurant and 20 lakh, which is subject to full GST. So meaning thereby, first of all, any credit which is being used exclusively in the restaurant, no credit available. For example, purchase of furniture for the restaurant, telephone installed in the restaurant, no credit. Now it comes to common credit, security, banking and financial services. So common credit, suppose it is 100 rupees and your 5 lakh is the turnover of restaurant, 20 lakh is the turnover which is subject to full rate of tax. Turnover. So out of 100 rupees credit, 20% of that common credit will be disallowed. In addition to the credit which is being exclusively used for restaurant services. Am I clear?
Right, sir. IC sales to be shown in return. Any GST on it as payment received in foreign currency. IC sale.
Kindly repeat the question slowly.
IC sales to be shown in return.
IC sale. IC sale
to be shown in return.
इस पे credit reversal.
Any GST on it as payment received in foreign currency.
If the query I have understood it correctly is IC sale, either payment is received in foreign currency or INR, is not subject to tax. If you read at Schedule 3, the activity specified therein is neither amount to supply of goods nor amount to supply of services. So obviously there is no liability on that. In the case of export of goods, payment in control foreign exchange is not required. So IC sale is only in the case of goods. Secondly, if you go to section 17.3, which says for the purpose of reversal of credit, this amount has to be ignored, meaning thereby it will not be considered as exempted services. I'll give you an example. आपकी हाईसी सेल 100 रुपए है, 100 रुपए की टैक्सेबल सेल है, 100 रुपए की एग्जम्प्टेड सेल है और आपका क्रेडिट है 10 रुपए. तो आपको ये जो हाईसी सेल है इसको इग्नोर करना है. बाकी टर्नओवर हो गया आपका 200 रुपया, 100 टैक्सेबल है, 100 एग्जम्प्टेड है, तो आपको 5 रुपए रिवर्स करने हैं. हाईसी सेल विल नॉट बी इंक्लूडेड इन द टैक्सेबल.
सर एक क्वेरी बार बार आ रही है कि एडवांस लॉकर रेंट आपने एक्सप्लेन कर दिया, जो एरियर है लॉकर रेंट के उसके ऊपर जीएसटी कब देना है? आई नहीं.
दोबारा बोले.
एडवांस लॉकर रेंट यू हैव एक्सप्लेन.
हाँ.
व्हाट अबाउट एरियर्स ऑफ लॉकर रेंट?
Areas of locker rent का question नहीं है, because now there is a point of taxation as earlier. Now it's a time of supply. So when I am supposed to make payment for that annual rent, let us say I am charging locker rent on quarterly basis from all the persons who are occupying the lockers. So if quarterly basis for the quarter ending April to June, I have to raise an invoice by 5th of July. So I'll raise the invoice irrespective of the fact whether I have received the amount or not. I am supposed to discharge the GST liability at that point of time. उसमें टाइम ऑफ सप्लाई के हिसाब से मुझे liability discharge करनी है.
एक लास्ट क्वेरी है सर, इज जीएसटी एप्लीकेबल ऑन अमाउंट रिसीव्ड बाय इमिग्रेशन एजेंट फ्रॉम फॉरेन कॉलेज एज कमीशन?
Immigration agent, we have to see to it, because there is one exemption which is being given to the educational institution, wherein the service is in relation to the admission of the student. But because it is a foreign university, according to my understanding, that exemption will not be available because it will not fall in the definition of educational institution. So you are liable to pay GST. But for the correct answer, you have to give me the facts in detail. Prima facie, it is subject to GST.
In case assessee buy dyes and molds used in product development from China and forward that in China to manufacture, payment to be made by dealer from India, is GST applicable in India?
I am not able to get you. I am not able to get.
Dyes and molds China में develop करवाए,
China में
develop करवाए और China में ही manufacturing के लिए दे दिए.
Okay.
इंडिया में वो प्रोडक्ट आया नहीं, उसकी पेमेंट इंडिया से हो रही है.
That doesn't matter. आप ये कहना चाह रहे हो कि मैंने चाइना में कुछ डाइज एंड मोल्ड्स डेवलप करवाए. So this is one supply. It has nothing to do with your manufacturing. So one supply is there. So he is supplying me the dyes and tools for which he will be raising an invoice, and he has charged me services. If the place of supply is in India, certainly it is an import of service liable to be taxed. If the supply is not in India, most likely in this case it will not be place of supply in India, then no GST. Then comes, once I have handed over those mold and dyes in China to another manufacturer to manufacture something, so that is a different activity at all. So we have to look at it. If dyes and molds are being developed by a China supplier in China and place of supply is in China, then it is not import of service, not subject to GST.
Right, sir. Thank you, sir. Thank you very much, sir. Shashi ji, please take over.
Thank you so much, sir. Special thanks for answering our queries in detail, and special thanks to all the members. I will request our Vice Chairperson, C.A. Sonia ma'am, to kindly present vote of thanks.
Good afternoon, everyone. I, on behalf of Jalandhar branch of NIRC of ICI, extend a hearty vote of thanks. Sir, it's really a true blessing that we have started first day of the financial year under your guidance of a highly knowledgeable and humble person. Everyone at this time is getting into technology and wants to make best use of it. But benefit of techno-savvy can't be achieved, sir, unless we have a genius person like you who is guiding and making us sail through. Thanks for a wonderful deliberation and recharging our energy level. And thank you all for your showing your interest and giving us opportunity to start it and continue it for a regular period of 14 days. Thank you so much, everyone.
Thank you very much, Ji.
Thank you,
very
Sonia
much
ji.
for
Thank
your
you, sir,
presence.
Batra ji.
Thank you, Batra
Thank
ji.
you, sir.
Thank you very much, sir.
There is an announcement that along with study, we are also using our time for fun activity. So information of that is also being shared with members about Tambola. So members are requested to participate in that also, contribution, which is also contributing to PM Relief Fund also. Thank you all the members for joining, and please stay tuned for another session tomorrow and onwards. Thank you so much. Thank you all.
Thank you, Ji.
Thank you.